Off the market and all that's happening in the world, let me take it across to Devina Mehra, founder and CMD at First Global, and chat about exactly that. Devina, hi, morning. Good to have you on the show. I guess the big headline has been the spat or breakup, if you will, between Musk as well as Trump. And what a costly one it turned out to be. Having said that, what do you suspect could be the ramifications? Because Musk has even called for Trump's impeachment.
Good morning. I just posted on that, and this was a plot twist that was very, very predictable. So any couples counselor would have told them that this was not going to last, even if in today's America, if they've gone to the church pastor also, they would have told. So, very predictable what has happened, and that is. The two people like that were not going to make it. So, till 2 days ago, Elon Musk found only good things about Trump, and now he's calling for the impeachment and saying such ingratitude that all the money I spent on your campaign, you've forgotten about it. So, it's going to get uglier. And I remember Elon Musk was not born in the US. He's an immigrant. And he still holds on to his South African citizenship. Also, I believe, a Canadian citizenship. So there are many things that could happen. So let's see how it pans out. But I don't think things are going to. This is bad news as such for markets, because I don't think whatever Musk was doing within the government was something which was very desirable. It was just getting access to a lot of government data, and also slashing a lot of things without understanding what they were really doing. So I don't think his going away from the government is a negative thing for the US.
Okay, Devina. Hi, morning. This is Nehi also joining in. Always a pleasure chatting with you and appreciate the candid view that you've given on this deteriorating relationship. But like you've said, that this is only meant to become more sour in the days to come. Give us a sense of the impact this could have on some sectors that are heavily reliant, because we've also seen a 14% crash coming in on Tesla's stock. And with everything that's going on around the rare earth deal with China, Trump has very clearly said he's not going to entertain questions on that. Now, he's someone who's not going to turn down talking about a topic unless it's sorted in his head. So where do you believe this narrative is headed, and how could this shape the global EV space?
Let us see how it goes. And that's a risk area that for a lot of the EVs in the world, for a number of things, which we saw in India also recently. The only supplier effectively is China, or China controlled entities, because China has very strategically controlled a lot of areas, not just in Asia and Africa. I've been surprised in some of the books that I have read that they've been there in right from South America to the Arctic Circle. So wherever they think there is strategic raw material or other strategic goods, they have been there. So that's a risk area for the EV industry. Tesla as such, we have not held in our global funds for a while now, because it is too volatile and too unpredictable a stock, too prone to news. So that we have steered clear of. We have among the majors, that's a high risk stock in our category.
Morning, this is Shrishti. But now let's shift focus to the Indian markets then, because I remember back then when you joined us in March, the market sentiment was not that great, and you believe that in this time where the fear is actually gripping the market sentiment, it's good time to invest, stick with the large caps and have a strategy. But now from those levels, markets have already seen a good run up. So how are you seeing the Indian markets and the fundamentals shaping up, Devina?
Yeah, so actually, I was looking at some of my podcasts from February, which is because my book had released. I had done a few of them, and in every one, I have said the same thing, that if you were waiting for a correction to invest, have you invested? And that's when Nifty was in the 22,000 range. So it has gone up, of course, since then. But my recommendation is still to remain invested, because always you have to do look at the trade-off, that what is the percentage and probability of the downside versus the percentage and probability of the upside. And we are still in a good space there, at least as you said, in the large cap mainstream stocks. Of course, you have to be sector specific, stock specific. That having said that, it is not a time to be sitting out of the market. There's no good reason to do that, because most of the time it makes sense to remain invested unless a crash appears imminent, which is not the case. And the statistic I've given before also, that in 40 odd years, if you miss out on the 10 best days, you miss out on 2/3 of the return. So your 100 rupees, instead of being 75,000 or so, would be 25,000. That's the kind of risk of sitting out. So you should not have 100% in equities, but is it a time to be invested as far as your equity allocation is concerned? The answer is yes.
All right, Devina, but in your book itself, you have highlighted and advocated rather the thought of going global, because there stands a risk if you are one market centric, there stands a risk if your portfolio is concentrated in just one asset class. So give us some sense that for this particular year, which market and which asset class you believe can be the outperformer?
Yes, and in my book, which is here with the national bestseller tag, I have also said that the US is not the world, which is the way a lot of people think, is that globalizing means buying a US index or buying the half a dozen US stocks you know the names of. I mean, many funds also run on that strategy. So in our global funds, especially since January, we have been underweight the US. So we are overweight Europe. We had slightly increased our fixed income allocation also, though that's also been very volatile now. And we have been overweight China from somewhere last year, and we are slightly overweight India. So that's broadly where we are as far as global funds are concerned. We've just carried out our India rebalance also, because we do it every quarter. So April was the month, April end or so. So there also now, in terms of sectors, we have been overweight pharma and auto components from almost the beginning of 2024, and that continues. So pharma and healthcare probably in just percentage terms would be our highest overweight. We are last few quarters where weight has been increasing, and now we are overweight is FMCG. So that's one area where we have been increasing weight. We have increased weights in bank, but we are still not overweight. We're still underweight, but the last couple of rebalances we've added in bank. So global and India, that's broadly where we are overweight.
Interesting, Devi.
If you like this video, then like, share and subscribe to ET Now.